Good day, everyone. Yeah, welcome to the lesson 2 of the Forex Manual of IOC Forex Academy. So in the lesson 1, I talked about money management and cash flow, how to manage your money, your income statement should look like, and I talked about what makes a rich person and a poor person. I talked about finance. That was what the lesson 1 talked about. I was talking on finance, how to be able to go from transition from being someone who cannot manage funds to someone who can manage funds, and what the purpose of money was, and all that. It's a whole lot of information there in the first lesson. So if I have not watched the first lesson, I urge you to go and watch the first one. I've posted I've done the introduction and the lesson 1. Now it's time for lesson 2. So make sure you watch all those lessons, and I urge you to watch it at least 3 times, each of them, so that you can comprehend and go further. So let's go to the lesson 2. So we have here some rudiments of Forex. So let's just jump right in. There's no time to waste. Okay, the Forex market. The Forex market means the foreign exchange market in full. Some people call it FX. It's a marketplace where various national currencies are being traded. So in here, we trade currencies. We buy and we sell currencies. It's not that we buy currency as in we must take our money and go and buy currency. No, the buy and the sell are just trading terminologies we use for when we expect the market to move up, and we place a trade for it to go up, we say we are buying. If we expect it to come down and we place a trade for it to come down, we say we are selling. So those are just trading terminologies. So it's a marketplace where we trade currencies. The forex market is the most liquid market in the world, with approximately $6.3 trillion changing hands every day. So the forex market is actually a very large market. It's a large market with lots of liquidity, and it's a market that is being manipulated. I have to tell you, it is being manipulated not for your favor, for the favor of people with large funds, people with large liquidity. This is their playhouse. The forex market is their playing ground, and they manipulate it to the place where they like. Now, there's nothing to fear about that. And this is one of the reasons why so many traders, they lose their money, because of originally they are trading against these large traders and the big banks, the people that put in large liquidity, millions of dollars to trade the forex exchange market. But here in IOC, we teach the underlying factors to look at the market as a large trader. Yes, you have small funds, but these large traders, these manipulators of the forex market, you will see some of the forex traders, they will say, as soon as the thing took me out, it reversed and went the right direction with speed. Why is that? It's because of it is being manipulated, not in the favor of uninformed money. Uninformed money are those that trade the market without the knowledge of the smart money, the market makers, the big traders. That's what we call them. We call them smart money. We call them the big banks. We call them the market makers. Those are the large traders. So when people trade outside this knowledge, we say that they are uninformed money. When people trade with this knowledge, we say that they are smart money. Understand? So the battle is between smart money and uninformed money. So smart money always wins, because they are the market maker. They are the one that books price to go up and book price to come down. Retail traders don't have enough liquidity to push price. They don't have enough liquidity to push price. When these big players come, they load in lots of trading orders. They load in lots of money, and you see the market go up and come down. And they don't do it in a random manner. It's not random. There is something they look at. There's something that they employ. And this market is not even physically manipulated. an algorithm, a computer AI, an AI runs this market, and AI is responsible for printing the chart for us. So, and the AI have been programmed by certain underlying factors to determine when to push price up and to push price down. And what it uses to push price up and down is counterparty. It is opposed to what uninformed money, the retailers, know. If you go and watch Forex on YouTube, on anywhere, Instagram, Facebook, anywhere you watch Forex, you see that they mostly say the same thing. I can tell you with all respect, most of them are rubbish. They are nonsense. They are trash. I used them before, so I can have the right to say that they are trash because I have used them. I was their customer. I used them before. Understand? So, and I lost money then too. So, it's something that there needs to be a paradigm shift that, see, what is the way that when the market makers come out to hunt for money, they come out to take people out, what is the way that they will always see people there to take out? What is the way? What is the way? Just think, what way can they employ that whenever they come out to hunt for money to take, they have people in their trap? The way they use that is by teaching everyone the same thing. They teach everyone the same thing. They teach you on how to use indicators. They teach you on how to follow a particular system, so that when they are trading opposite what they taught you, the AI knows where you are looking at. So he sees your order, even if he's not physically seeing your order. They don't really, as in physically monitor anybody. They don't monitor anybody, but they know what, on a large scale, everyone is looking at, because of they all trade with certain informations. You can go online and check IOC calls, what we teach. If it's found online, you will not see it there, because of it's a secluded information. It's something that it is not out there. Even if you tell our concept to uninformed traders, they will tell you that it's a lie. I usually tell myself it's not about saying which concept works and which concept does not work. Our account statements, once we trade, that one will do the whole talk for us. It will tell us who is profitable, who is not, who is consistent, who is not, who has a better understanding of the market, and the person that does not. So the Forex market is the playground of the market makers. And in order to profit here, you need to know how they trade. It repeats every time. It does not change from generation to generation. It remains the same. But that information, they will not tell everyone. Understand? So don't be scared that after you learn IOC, they will not change it. No, it does not change. It happens on every market, on crypto, on volatility, in your futures market, everywhere. It happens everywhere, and it's consistent. Okay, so an example of such national currency that are being traded are the United States dollar, that the USD. Now, this USD is called an ISO code. It is gotten from the name of the country delivering the currency. So United States, US, then the currency, dollar, D. The Japanese yen, this is JP, and the Y, JPY. The Canadian dollar, CAD, NZD, and so forth. Just like here, the Nigerian Naira is called NGN. So that's the ISO code for the Nigerian Naira. In the Forex market, we trade this currency in pairs. So in this market, we trade this we trade by pairing up these two things, by pairing up either this and this, this and this, and we have so many currencies. We have so many national currencies. And in your basic, you're going to learn that we have so many currencies, which are your we have major currencies, we have minor currencies, and exotic currencies. You understand? So the minors are already called cross. So we have all those currencies, and based on how we pair them up, we trade them in that line. So they are being traded in pairs. So when they are being joined together, it's called a pair. A pair consists of two things. So when I join USD and JPY, giving me USD JPY, it's called a pair. So the USD JPY, USD is the first one, so USD is the base. JPY is the last one in the pair, so JPY is the quote. So let me show you an example of that. So now I have Euro USD, it's a pair. If I join these two together to give me one, it's a pair. Euro is the base, and this is the quote. In order to profit when trading the Forex market, we have to place trading orders. So what are trading orders? They are orders we give to our broker to place us, to execute our trade either now or for later. If we do it now, it's called instant execution. If we program it to be able to happen later when we are not watching our phones or our laptops, it's called pending orders. So, and we can only place two types of orders. We can either buy or we can sell. If we buy, like I said, that means we expect the price to go up. If we sell, like I said, we expect the price to come down. So there are some markets whereby you can only profit when the market is going up. No, it's not in this Forex market. The Forex market, if the market is going up and you are buying, you'll be in profit. If the market is coming down and you are selling, you'll also be in profit. You can trade the both sides of the market. Understand? So I talk in depth on this in the basic course. Okay, so like I said, if we are buying because we anticipate the base to be stronger, so if we are buying this thing, that means we see that this euro is gaining more power than the USD. I'm not saying in practical terms as in the price of euro exchange rate is bigger than USD. I'm not saying that. I'm saying currently they are trading power when they are trading on our charts in that manner. Understand? So if we are buying, then we say that this is stronger than this. If we are selling, then we say that this for now is stronger than this. If we are selling, that means this is stronger than this. So this is buy, is sell. So if you are buying, we say that this is stronger than this. If you are selling, we say that this is stronger than this. So because we anticipate the bid to be stronger than the quote, and at that time, and price goes up, we will be in profit. Also, if we are selling because we anticipate the quote to be stronger than the base at that particular time, and price goes down, we will be in profit. It's also important to note that we will be experiencing a loss if the price does not go in our direction. So if we are buying and the price is coming down, we will be in a loss. If we are selling and the price is going up, we will also be in a loss. So if we buy, expect the price to go up. Now, the market does not travel in straight lines. It does not go straight like this. No, or like this, no. It will go up, it will come down small. This is what we call retracement. It will retrace back small, a little bit. Retrace, it will expand up again, it will retrace. So when you see it coming down like it does not mean that you should close your trading order for a buy and come out because you feel that they want to reverse it again in the direction. No, you have learned what the market is to be doing, and you stick to that. You just leave your trade and you go on with your daily business. You can go on and play with your kids and whatsoever. So if you are selling, you expect the price to come down. If it's coming down and it does any minor retracement up, you don't get scared. You still remain in, and eventually you see it in that manner like that. So whenever we are trading, we must make sure that if we are buying, we have certain parameters that secures our trade from too much risk. Like I said previously in the previous lesson, that we are risk managers. We are money managers. It's not just to answer Forex trade. No, you are a money manager. You are a risk manager. So whenever we are trading, to make sure that our trading orders are secured, thus certain boundaries. If we are right, we set boundaries that you tell your broker. The brokers are the people that give you the platform to trade. Just like you have Hot Forex, OctaFX, FXTM, Wanda, Xness, Hantech, Anzo Capital. all those traders, they give you platform to trade. So when you're trading on their platform, you can give them certain orders that puts me in at this point, even if I am watching my phone or not. Put me on a buy at this point, they will do that for you. If the market comes down below this against my direction, take me out, they will do that for you. I don't want to lose more than $20 from my account, they will do that for you. You are the one that will tell them what to do. It's not the market will just come and scatter your whole account off. No, it's not like that. You give them the outlines of what you need them to do. If I'm in profit and the thing gets to $100 profit, take me out, even if I am with my phone or not, they will do that for you. It is programmed. You set all those parameters. The reason why some persons come to the market and they lose all their money, they don't know all these things. All the foundations, you don't know. You just see anything and you press any button. It's not like that. Understand? So if you secure your trade from a loss, you put a stop loss. It is called a stop loss. It is a price you put. I don't want the trade to go below this price against my direction. If I'm in loss, you will set it. It's called a stop loss. If you're in profit and you want to come out at a specific point, whether you are monitoring your phone or not, you set what is called a take profit. So take profit is for profit, stop loss is for loss. So let me show you example of that in the next slide. I will show you that. So I said, in other words, your stop loss is your exit price, the price you want to come out when you are in a loss. And your take profit is the price you want to come out when you are in profit. It's also important to know that in order to maintain a nice portfolio, which compounds with time, we must make sure that whenever we are coming to the market, our profit is always bigger than our risk. That means what you are to earn is always bigger than what you will lose if you are wrong. And in here, in IOC, after you have learned, or we will tell you, you will always be right more than when the times when you be wrong. I have students here. I don't just like talking about myself. I talk about those that I have trained. I have students here that 80% of the times they are right. 90% of the time they are right on calling the market. Understand? So when we employ this with other money management systems, we found that it will really boost our accounts. Our profit is always bigger than our risk. So imagine that you are risking 1 to gain 5. If you lose 1. I said in the previous lesson that we don't risk more than 3%. So let's just say for a particular scenario, I'm risking 2% to gain 5 times of that 2%. That means if I lose, I'm losing what? Only 2%. But if I gain, I'm gaining 10%. That's 5 times of the 2%, because 5 times 2 is 10. So I'm gaining 5 times of my 2%. So you can imagine, even if I lose 2% 5 times, I lose 2%, I trade again, I lose 2%, I will not feel hot, because 2% is very, very small. But once I gain 5 times of that, you see the account begin to swell, it begins to grow, it begins to become big. That's how we grow account. We risk small to gain big. We always risk small to gain big. So that's it. So I teach on more money management system in the advanced course. What percentage to risk at certain points, how do you level up, and how do you go, all that. I teach all that. So the next one. So now this is where this trader wants to enter. This trader, I've seen the market expand up and it's coming down. But the trader said, oh, I think if I enter here, I want the market to reach here. So this blue line where the thing stopped here is the take profit. This red one here is the stop loss. This one you're seeing here is called the entry price. This is the price the trader wants to enter. If you check the price, it's what? 1.05215. And this pair is Euro USD. The Euro pound, the Euro with the United States dollar. So this y-axis here, it shows us our price. This x-axis here, it shows us our time. So you're seeing dates here. Dates. This ones you're seeing here, this is the Euro USD, this is the pair. All these ones you're seeing here, they are called your time frames. It shows you your different times to toggle between on your chart. You have your 15 minutes time frame, your 1 hour time frame, your 4 hour time frame, daily time frame, and so forth and so on. Now, this is the daily time frame is active now because of it's shining blue. So what this thing means is that every candle you see here, all these things, they are called candles. Each of these things, this is a red candle, this is a green candle, it's a red candle, it's a green candle. A red candle meaning that the price is coming down. A green candle means that the price is going up. Red means the price is coming down. So each of these candle represents one full day. It took one full day for each of these things to form. That's why it's a daily time frame. If we enter the 4-hour time frame, every candle you will see there, it took 4 hours for each of them to form. So this trader says that he wants to enter this price, this market at this price, and expect it to go up to this point. So this is the entry point, and this is the stop loss. This is the take profit. We have talked about that in the previous slide. So he enters here, he puts his stop loss here. If it goes out of here, my broker take me out, even if I am not watching my trade. If it reaches here, my broker close my position, even if I'm not watching my trade. That is take profit, this stop loss, this entry price. So the stop loss price is what? 1.04455. The take profit price is what? 1.08727. They are being highlighted here on the chart for you. So, and you can see here again that the stop loss, the risk is smaller and the reward is big. This is like 4 times or 5 times the risk thereabout. This is, let me just use my eye. This is maybe 1, this is 2, this is 3. So thereabout, like 5 times thereabout of the risk. So if this trader is risking from here to here 3%, a trader goes right and it gets here, the trader will gain 15% just from risking 3%, because 3 times 5 is 15. So, okay, now you see, just watch. It was the same slide. Look at it. This is 2023. So this is a current chart. So you see now the market went up and now it entered the price, and there you have the trade will be closed automatically, whether you're with your phone or not. Like now you're seeing sell and you're seeing buy. Understand? So if you sell, that means you want it to come down. If you buy, you want it to go up. So now this is for selling scenarios. When we are buying, our stop loss is down, our take profit is up, because we want the price to go up. When we are selling, our stop loss is up, our take profit is down. This is the entry price here. So the trader wants to enter here and want to anticipate the price to come down to this point for him. Let's see if we'll be right. Now you can see now the price came down to this point. So the trader will be in profit. This particular trade was like, this is 3 times of the risk. So the trader entered here at 1.05883 with a stop loss of 1.07803 and a take profit of what? 0.99656. So you see the take profit is lower than the stop loss because of it is a sell. If it is a buy, the take profit will be higher than the stop loss. So there you have it. So we have some advantages of trading the foreign exchange market. The number one is that financial freedom. And this is only for those who have mastered the art of trading. Like I said, you cannot get money from a market that you don't understand. You can get it for some time by luck, of course, But if you want to take it as a career, as something that you should be doing, and you want it to be consistently for you like that over the years to come, I'm looking to trade until the last day I will leave this earth, and my children will trade by force. All my children will trade by force. You have no option to decide whether you trade. All my children, they will trade. My family will trade. Understand? So you can become a doctor, you can become a lawyer. That one is not my business. As far as you love what you are doing, but you will use this Forex market as a cushion, as a support system for you, because I know the benefits of it, and I know how valuable, how invaluable, because you cannot pay any money for this thing. I'm telling you, there is no quoted, you cannot pay any money. Can you pay for something that will make you money? I don't think you can pay for it. That once you have gotten it, you can make any money as you like. I don't think you can pay for it. And we're giving this course to you for free. So the financial freedom is only for those who have mastered the art of trading. So in the forex market, we don't pay any commission to anybody. There are even brokers that give you free money to trade. They give you free to trade. We don't have any middlemen. There is no risk attached, in the sense that you must not risk. It's not that if you put your money, your money will lose. No, your money will not get missing when you put your money into the forex market. And you only put your money with regulated brokers that are regulated and licensed by a particular body, which will tell you in your basic class, and will tell you how to pick all your brokers that you should be trading for, how to know when a broker is viable and or not. So low transaction costs, and your demo platform. Your demo platform is a virtual account that is given to you. You cannot withdraw from it. You cannot also, you don't have any risk attached to it. They give it to you for you to test your ability. Just test your ability. Even if the whole account goes in loss, it's not their concern, and it's not your concern. Nobody bears the risk. Understand? So demo platform. So things to know about the forex market. Forex is not a get-rich-quick scheme. Those that make money from it, they know what they are doing, and they have stick to certain rules and certain system, and they have knowledge of the foreign exchange market. So if you want to be on that line, you have to know what you are doing. Constant profitability exists in this market. It exists, and I'm a beneficiary of that. No one is perfect, not even me. I am not perfect to be able to call the market all the time, 100%. It's not all the time I trade, I make money. I've told you, don't see risk as failure. When you lose a trade, does not mean that you're a failure here. When you lose a trade, it means that it tells you that at that point you were wrong, but come back again tomorrow and trade. Come back later again and trade. And you can only come back when you have reserve. How do you have reserve? By taking only a portion, 2%, 1%, 3% to trade. So when 2% is gone, you have 98% left to trade again the next day. So you are taking care of your imperfection by risking small to gain big, and also learning more, increasing your earning ability, your knowledge of the forex market, to understand the chart better and better. So yes, you are not perfect. That's why you have a stop loss. If there is no one trader in this world, no one trader in this world that is perfect. If they are perfect, they will not trade with stop loss. If you are perfect, you will not trade with stop loss. We put stop loss to take us out when we are wrong. No problem. You took me out today does not mean that I don't know what I am doing. It just means that at that particular time, maybe I was not so focused, or I did not really give in time to check what it will do, and I called the market wrong only at that time. It will still give me several opportunities. There are sometimes I see 4 different opportunities only in one day. So imagine if you lose 2%, the first one, and you came back again with your 98% remaining, you still reach 2%. And this time you got it right. You got 6 times of your risk. That is 12%. The next 2% you risk, you gain 12%. You can imagine, you have taken your account front, you have added to the profits. Then you come back again and you trade. You come back again. That's how it is. I told you, my students here, most of them, they call the market. 80% they are right. 90% of the time they call the market. This time it will buy. This time it will go up. This time it will come down. They are right. And I have proved that. I have proved the consistency of it in my Telegram chat with you, in my weekly analysis I do for you every Monday. I'll be able to prove that, see, I'm calling the market to go up and it went up, to come down and it came down. So you can increase your knowledge on this, yes, but you will not be always perfect. Why? Because you are human. You are a human being. You have other activities coming in. If you're a married man and your wife does not talk to you and you are angry, or your children made you angry or something, or you missed a loved one by death, understand, you lost a loved one, of course you feel pained, and sometimes you'll be psychologically unstable. So there's a highly likelihood that when you come into trade with such kind of a mindset, your mind will be clouded by that pain, and there's a likelihood that you may lose money only at that time. Understand? It's not a must that you must even lose money. But me, I have grown to a point whereby I can manage my emotions. I can manage my emotions. I manage them. My emotions do not get control over me. I gain control over my emotions. And all those things come with time. I also teach you how do you manage your emotions? How do you get to a state whereby nothing affects you? All those things are in the course here in IOC Forex Academy. So do not focus on the money, rather focus on the knowledge, the process, and the habits, and the money definitely will come. So Forex requires lots of obedience, discipline, and patience. You need to be patient. You need to have realistic expectation. Your first withdrawal from this market will not be $1 million. Life is in phases and men are in sizes. The more you learn, the more you grow, the more you will increase your earning ability, you will earn more. So that's how the market is. If you spend down from your kindergarten, you went to your primary school, you went to college, your secondary school, then you went to university. If you spent all those years just to learn a particular field, let's say medicine, law, engineering, if you spent all those years, minimum, we're talking about maybe, let me say, 12 years or 16 years. Understand? If you can spend even 20 years just to learn a particular field, what will make you believe that the largest financial market in the world that produces $6.6 trillion every day, you can come in only one day and you learn one thing and you be able to pack all the money? No, you have to give yourself time to do that. That's why the Forex Manual we are giving now, it's a guide through the remaining part of the course. Understand? This is not all there is in Forex. It's a guide through the remaining part of the course. When you come to the basic, you will learn the things that gives you your basic. When you come to the intermediate, you will gain your foundation. The advanced, you will improve on that. The masters, you will gain professionalism. So that's how all those things have been designed. So you need to apply discipline, patience, obedience. You need to go for knowledge. You learn before you earn, of course. Then trading the Forex exchange market is a career of its own. I don't like to see it like a side hustle. I don't like to see it like that. Forex is a career on its own, and you must employ business principles, business strategies if you want to succeed here. You must employ all those things. You must see it like a business. You want to protect your capital. You want to protect your profits. You want to make sure that whenever you're coming to the market, you know what you are doing. That's how I see my own trading. My Forex trading, it's a business, nothing less than that. I don't joke with it. It's a business. I come in every day. I write what I want to do. I follow it. I monitor my weekly profit, my daily profit. I monitor all those things. And it makes me come out profitable every week, constant, because of I take it as a business. Understand? So it's a career of its own. Attaining consistency trading the foreign exchange market is a skill, and any skill can be learned, just like the foreign exchange market. So we are done for the lesson 2, and I believe it was a nice one. I believe you learned something. So go over the course once again. You cover the course and you check in things to learn and to understand better what I taught. There are sometimes I may say something and you may not really grasp it, but the second time you listen to that lesson, you will fully comprehend. So in the next lesson, I'll be talking about compound interest and money management. How do we use that in our favor? So I'll be seeing the next lesson. Have a nice day. I remain your mentor, IOC. Thank you very much for being with me in this course. Have a nice day.